Welcome back, and the conversation about the AI bubble intensifies. Has the AI bubble popped? Well, now Peter Thiel, well-known billionaire and investor, has followed SoftBank, another bank investment firm, and they quit their NVIDIA position as talk of AI bubble intensifies. And by the way, this whole AI bubble conversation doesn't just impact AI companies. It really impacts the entire tech industry, and also these Bitcoin mining companies that have pivoted to AI and to the data centers and to the energy sector. Because as we know, these companies have been expanding very rapidly and pumping billions and making a lot of announcements about, partnering with other companies to expand this whole operation into the AI sector. But one of the things that we have to keep in mind is it's impacted jobs. It's impacted people's wallets. People are starting to realize, wait, my electricity bills at home are doubling or tripling. And why is that happening? Well, because we're subsidizing these AI data centers that are popping up. This alongside companies, these tech companies and other types of companies, including FedEx and Amazon, that are logistics companies that are cutting literally tens of thousands or hundreds of thousands collectively in jobs as the move to AI intensifies. And people are starting to notice, and they don't want their electricity bills double or tripling. They don't want to lose their jobs. And so this AI bubble may not be based on the technology or the potential expansion into that technology. It may just be having to do with keeping things the way that they were and not shaking things up too much. Because if you lose your job and you're paying double or triple for electricity and all the inflation that we've dealt with over the last few years, this could be a huge issue. In today's video, we're going to be exploring, has the AI bubble popped? What do we need to do in our portfolios? And how do we make money, whether we go up or whether we go down in the markets? Make sure you guys are subscribed to the channel. We upload every single day of the year to bring you the latest happening in the financial world. Also, do me a favor and give the video a free thumbs up, because you guys know thumbs up are free. Crypto and some of these stocks are definitely not free. They're the most valued companies in the history of the planet. Let's get into the AI bubble continued. Now, I have posted videos on the AI bubble, and I posted videos on should I short NVIDIA just at the end of 2025. And as you guys can see, these videos did not get that many clicks, because people want to see more of the, buy NVIDIA. This company's going much, much higher. But I want to remind you that these companies, especially the big ones like NVIDIA, are the most valued companies in the history of the planet, with over $4.5 trillion in market cap, and at its peak hitting over $5 trillion in market cap. This is more than double the entire market cap of all of crypto combined. If you take a Bitcoin, all the altcoins, all the meme coins, and all the coins, and you combine their market caps, NVIDIA is more valued than all of those put together. And so Peter Brandt said, is the walking robot about to adopt movements of the Tin Man from Oz? The head and shoulders top is complete. Individual stocks generally have brief tops, while indexes top over time. And so basically, this is a chart that shows you the iShares Robotic and Artificial Intelligence ETF called ARTY. And you can see that it's kind of rolling over. And as we've seen in crypto and many of these individual stocks, specifically in the AI sector, we've already seen tops, right? We've already seen tops forming, and a lot of these companies' stocks have come down precipitously. I mean, if you look at one, for instance, Marathon Digital, this is a Bitcoin mining company that has pivoted to AI. And this is a really good example, because they hold 50,000 plus Bitcoin on their balance sheet that they purchased in the middle of 2025, a large majority of that. But they also pivoted to AI a little bit later than most of the other Bitcoin mining companies that are now AI data center companies. But you can see here that Marathon Digital topped out in October and came down precipitously. And I think that this is a great example, because effectively, Marathon Digital is still an AI company and also a Bitcoin company, right? So it's still in both, where a lot of these other companies have pivoted more heavily to the AI sector. So a company like Iris Energy hasn't come down as much. I mean, it still has definitely topped out. You can clearly see that right here, but it hasn't come down as much as Marathon Digital. I mean, Marathon Digital went from $20 and it's down 50% in 1 month. When we look at Iris Energy, it's a whole different story. Iris Energy from the top till now is about down 37 or 40%. So close to Marathon Digital, but not yet there. And so when we think about, this whole AI and robotics field, the individual companies or ETFs are going to give us a little bit more clear insight as to where the market is heading and trending than the index companies like NVIDIA, like Palantir, like Amazon, like Apple, because these are so big that, there's a lot of passive income that's moving into these stocks regularly. And it keeps these index stocks elevated much longer than some of these individual stocks. That's something to keep in mind. So when we're looking for bubbles in the market, part of what we have to look for is the signals that the market is starting to turn. The market is starting to adjust, correct. And by the way, Michael Burry, well known for The Big Short, he's now saying long MOH, which is, I think, a pharmaceutical or medical company, and long Palantir puts. He is, just in November, we found out that he is basically buying long-dated put options, which mean you're betting the price is going to go down for Palantir and NVIDIA. Palantir, he has strike prices in his puts of $50, meaning he thinks the stock is going to go down to $50. And right now, if we look at Palantir at the end of 2025, we're at $170, and it topped out around $200, a little bit over 200. I actually think that was the Pico top for Palantir, at least at the time. NVIDIA, he has strike prices of $100 per share, and right now it's trading at around $200 per share. So he thinks a 50% decline here, and with Palantir, a 75% decline. Now, why does he believe this? Well, a lot of this has to do with bubbles being formed, right? Overvaluation. People hear about the AI, people hear about companies doing more with AI, and the money starts flowing in. Then they start funding each other, right? We heard about the circular financing. OpenAI is funding NVIDIA, funding this one, funding that one, and they're all just basically funding each other. But people start to question, like, is this sustainable? And are they actually close to any actual products? Well, that brings us to why potentially NVIDIA is now exiting its bull market phase. Jensen Huang, the CEO, says NVIDIA's China AI GPU market share has plummeted from 95% to zero. And the Chinese market previously amounted to 20 to 25% of NVIDIA's data center revenue. And so this is really important to understand here, guys, because when we've been talking about NVIDIA, and by the way, there's a lot of people who say, oh, you pronounce it wrong, Cryptoviser, and that's the only thing. I post 40-minute videos, and that's the only thing that they take away from the videos, that I pronounce the stock incorrectly according to them. Okay, clearly these are probably the people who are still saying, no, I'm buying more of this stock. We're not in a bubble. That's who we're trading against. That is who we're trading against in this market. And here's the deal. I'm not hoping that these companies or these stocks drop in price. But based on the data, right, if we look at NVIDIA's stock price, the stock price has barely moved. Meanwhile, they just lost 25% of their revenue stream. Now, I'm recording this before their Q3 earnings call, which is, I think, the day after I'm recording this video. So by the time you're watching this video, the stock price is probably going to be lower, because I would imagine their earnings is going to show that they just lost a lot of revenue by exiting China because of this whole trade war situation. But either way, like this video is not about where the price is today. It's about where the trajectory of the price is going. And that's really important, because we are talking about the macro environment on this channel. We're talking about the macro trading environment. We're not talking about day to day, week to week, month to month. We're talking about year to year. What is the most likely scenario to happen with NVIDIA over the next year? What is the most likely scenario that's going to happen with Palantir over the next year? Are we going higher? Are we going to stay sideways trading? Or are we going to go lower? Or are we going to do a combination of all of those? Well, that's what we're looking out for. That way we can trade into that movement. So understanding that NVIDIA lost 25% of their revenue, they went from 95% market share in China to zero. What do you think is going to happen with their revenue over the course of time? Now, there's going to be people who say, well, Cryptoviser, they're making other deals with American companies, which is true, but is that really going to change the trajectory, or is this just artificial to kind of offset some of those losses that they've made? Why wouldn't they not have made those partnerships or funding announcements prior to the whole China situation? And that brings us to Peter Thiel. Peter Thiel follows SoftBank in quitting his NVIDIA position as talks of AI bubbles intensify. So a week after Japan's richest person disclosed that his firm fully divested his $5.8 billion stake in NVIDIA, Peter Thiel said that he's done the same. And so he's exited his position, right? Multi-billion dollars. Now keep in mind, in a $5 trillion company, a few billion dollars is like less than 1% of the market cap. But there's a lot of people and a lot of funds that will follow that. And will also see the signals in the market that this is overheated. How can a company be $5 trillion, more than double the entire market cap of crypto, and be immune to any corrective phase in the market? It's not. That's the point. And so if we know that NVIDIA is getting divestment across the board, what do you think that we should be doing with our portfolios? Well, that's up to you, because the only thing that matters is what you are doing in your portfolio, not what I'm doing in mine or what I think I should do in mine. It's about what you're doing in yours based on the data that you have in front of you. And this is the data that we have. Meanwhile, Deutsche Bank investment arm CEO says that there's no playbook for AI bubble fears. The explosion in the value of AI stocks poses risk to global markets, for which there's no playbook, according to the CEO of Deutsche Bank, amid growing concerns that the sector's in a bubble. The AI stock frenzy has drawn comparisons to the 1990s dot-com boom and bust. But the Deutsche Bank executive said that the recent rally was different, as it's being driven by everyday retail investors, not institutions, and they had yet to be tested. Now, this is really, really important to keep in mind. You have the CEO of a major financial institution, global financial institution, by the way, telling you, and by the way, this is not the only article that we've seen like this, where they're talking about institutions are not buying this market. In fact, institutions are exiting a lot of these markets. It's retail driving the market. For the entire crypto cycle in 2024 into 2025, everyone keeps asking, where's retail? Where's retail? Where's retail? Well, retail is here, and they're here late in the cycle. And so you have a bank saying, nope, this is not institutions buying this is retail. And then you have the retail trader saying, no, this is institutions, ETFs, BlackRock is buying Bitcoin. It's like, no, BlackRock bought Bitcoin. It's not like they're buying every day and it's their own money. They're doing what their investors are asking them to do. And a lot of these investors that we're seeing investing right now at the end of 2025 are retail, right? Everyday people buying and selling. It's not institutions. That is a signal, in my view. He said the so-called Magnificent Seven, which include NVIDIA and Meta, have seen their share prices soar, fueling fears about the scale of the market explosion. To just name a few, technology firms are among the stock market big fallers in recent days. And Deutsche Bank is examining whether the boom could be unraveled at a faster pace. The CEO said in an interview, adding that the many retail investors are sitting on big gains on stocks such as NVIDIA, could be quick to sell if sentiment soured. And here's the deal, we're already hearing the sentiment is souring. So by the time retail finds that out, you want to be out of the market by then. You want to be out of those stocks by then. Because retail is always last to know, last to find out. They're not in these markets every day like you and I. because we upload every single day on this channel. That's why it's important that you guys hit the subscribe button. Also, do me a favor, give the video a free thumbs up, because we upload every single day to keep you on top of the latest happening in the financial world. And again, we talk about the macro view, the zoomed out picture. And we have been so ahead of the curve, it's truly unbelievable. It's truly unbelievable. Now, another thing to keep in mind is we're hearing things like this. OpenAI, Oracle, and SoftBank expand their Stargate with 5 new AI data centers. This is going to be they're securing $500 billion and 10 gigawatt commitments by the end of 2025. But the thing is, it takes time to build what they're trying to build. And if everything pulls back, they're not going to spend all this money immediately. Because we're seeing a lot of circular financing, right? Google is building 3 new data centers in Texas and $40 billion investment. But the issue is the power. Where are they going to get the money for the power? Microsoft just signed a $10 billion cloud capacity deal with Iris Energy. Spanning 5 years, Microsoft will access Iris Energy's NVIDIA GPUs. Literally, Microsoft put all of the onus, all of the risk, all of the liability on Iris Energy. And the Iris Energy retail crowd, to this day, they don't understand. I mean, I still get comments on my channel. They're like, well, Cryptoviser, Iris Energy is not buying the GPUs. And it's like, no, they literally are. They are literally buying the GPUs, and Microsoft is renting the usage of them through this deal. But all the risk is on Iris Energy, because Microsoft can pull out. People say, no, Cryptoviser. Microsoft signed a deal. They can't just pull out. If Microsoft says, we're not paying you, we're pulling out of the deal, they're out of the deal. I mean, I'm sure there's exit clauses. I'm sure they may have to pay a fine or an exit fee or a penalty. But at the end of the day, Iris Energy is stuck with these machines that depreciate every single day. And the retail investors, they're like, no, Cryptoviser, that's not what's happening. And it's like, that's literally what's happening. That's who we're trading against. That's who the Deutsche Bank CEO said is driving the prices in the market higher. Is that really where you want to get stuck in a position when those are the bag holders? No, they're going to be bag holders because they don't understand how these deals operate. If Microsoft pulls back their funding, even if they don't pull back their funding, Iris Energy still loses, because they have to continually upgrade these machines, the maintenance on the machines, the depreciation on the machines, getting new machines. Iris Energy has all the liability there. And if they don't do it, they don't get another deal in 5 years. And so as we go along, it was buy the rumor, sell the news. The news is Microsoft put all the liability and risk on Iris Energy. You want to keep buying into that? Or is that the point that you sell? And again, going back to the stock price of Iris Energy, well, it looks like we topped out, but we're not coming down as hard or as far as other companies like Marathon Digital just yet, because Iris Energy is not as connected to Bitcoin as Marathon Digital is, but also because the retail crowd don't understand what this deal actually means and how not bullish the deal actually is for Iris Energy from a profit and growth perspective. But like I keep saying, that is who we're trading against. If you understand this whole dynamic of retail bidding it up, retail not understanding, retail continuing to keep the price elevated, when the price is dropping, I mean, still 40% is a huge drop from the top of the market. And granted, we may bounce from here. We may see sideways trading for a little bit, but the smart money is exiting. They got in down here at $4 or $5. They're still in a 10x profit. A lot of retail have been buying up here where they're not even in profit, or they're in very little profit. And they're saying, no, Cryptoviser, you're wrong. They don't own the machines. They're renting the machine. It's like, no, they own the machines. Do your own research. But they don't want to do the research. They just want to make money at the top of the market and say, no, there's no bubble. There's no bubble. It's like, guys, the Deutsche Bank CEO is literally telling you there is a bubble and that you're the only one buying into the market. It's not institutions. And by the way, the bank CEOs, they see the data. They can see who's buying and who's selling. So they know. They know. But that's who we're trading against. We know that that's who we're trading against. So that makes it so much easier for us. Because I'm not buying into Iris Energy at this point. And anything, I am net short Iris Energy. And that brings us to TeraWulf. Same thing. TeraWulf expands strategic partnership with FluidStack through a new 168 megawatt AI compute joint venture. It's $1.3 billion Google backstop for this long-term lease obligations in support of the project's debt. Just more debt. And by the way, I don't think AI is going anywhere. Don't get that twisted. But we have to remember, people's electricity bills are going up. People are losing their jobs. People are not that excited anymore about AI because of these things and the unintended consequences of AI continuing to grow in the future. Less and less jobs, less and less in the pay for jobs. The idea that you're going to be training the AI how to do your job, that is a concern for a lot of people. And if you're not concerned about that, I mean, you should be, right? No matter what your job is, but it's specifically the jobs that can be very easily replaced by AI. And you're subsidizing it through paying higher energy prices for the data centers. And so at some point, the government may kind of step in and kind of say, whoa, we got to pull this back a little bit. And they may kind of slow the funding down for this expansion. And so if the money dries up, all of these companies, their stock prices are going to crater, even if it's just temporarily, until they figure it out, figure out the electricity situation, figure out the job situation, because it's happening. I mean, Amazon has like 1 million robots in their warehouses, and I get it. People don't want to work in warehouses. I mean, it's probably very cumbersome for these companies as well. But look at this. Data centers are concentrated in these states. Here's what's happening to the electricity prices. Ohio has 193 data centers. Electricity is up 12% year over year. Texas, electricity is up 3.8% year over year. California, up 1.2% year over year. Virginia, 13% year over year. Electricity prices are soaring and voters are growing angry. And the AI industry's data centers are increasingly a target for blame with the midterm elections on the horizon. Residential utility bills rose on average 6% nationwide in August within the same period in the previous year. And by the way, I got an electricity bill recently, and it was almost double what it was previously. The reason for the price increases are often complex and vary by region, but at least 3 states with a high concentration of data centers, electricity bills climbed much faster than the national average during that period. Prices, for example, surged 13% in Virginia, 16% in Illinois, and 12% in Ohio. The tech companies and AI labs are building data centers that consume gigawatts or more of electricity, in some cases equivalent to more than 800,000 homes, the size of a city, essentially. Virginia has the highest concentration of data centers in the world. And one of the Congress people, or politicians, I should say, won the state's governor's race in a landslide by campaigning on the cost of living, putting at least part of the blame for rising electricity costs on data centers, promising to make tech companies pay their own way and their fair share of the escalating costs. And so effectively, whether it is because of the data centers or it's not, I mean, obviously as demand increases, the price goes higher, regardless of who it's coming from. So even if data centers are like, okay, we're going to pay whatever the electricity costs, it still is increasing the demand, because now you have these data centers that didn't need the electricity before, and now they need the electricity. And the supply of electricity isn't increasing to the same degree. And so people are starting to blame AI and data centers for this. And the more this occurs, especially if we are in or going into a recession, and more people are losing their jobs, and more prices are going higher, and inflation becomes an issue, this is going to be something that is going to continue to be a conversation. And I think that this is going to pull back between the data center electricity costs as well as the job losses, I think this is going to push back on AI and potentially confirms that we are in a bubble. Here's another example. This is from New York. It says a data center could be coming to an upstate New York town and residents are speaking out. Essentially, it says residents in an upstate New York community are trying to prevent construction of a planned data center by approving a year-long ban on large-scale development. Data center company TerraWolf has signed an 80-year lease for 183 acres of a former coal-powered plant, which sits at the banks of a lake in Lansing, a town of 11,000 people just north of Ithaca. Many of the residents there are concerned that the data center will raise electricity costs, generate noise pollution, and drain the region's water resources. So, I mean, this is happening to some of these companies that we already know. And in California, we see that Silicon Valley data centers stand empty waiting for power connections. 2 large data centers in California are standing empty because they're unable to get power connections. So it's all about the power situation. One company, Fermi, is having trouble signing its first AI data center power tenant. The company, which is organized as a real estate investment trust, plans to make up a 3-week delay in signing a final contract with its first tenant, but investors remain worried. And so we keep seeing more and more of this. And the question remains, is AI in a bubble? Is the bubble bursting? Are people pushing back and saying, hold on a second with this whole AI situation? And if the answer is yes, well, we know what to do in our portfolios. NVIDIA, Palantir, OpenAI, xAI, Google's Gemini. And by the way, this could potentially affect every single one of these AI data center pivot companies like Iris Energy, TerraWolf, Bitfarms, Marathon Digital, all of the Bitcoin mining companies that pivoted to AI. But here's the deal. It's going to be very interesting to see which of these companies pivot back to Bitcoin mining. Because as we go towards the bottom of the Bitcoin market, there is going to be a potential for these companies that pivoted to AI to pivot back to Bitcoin mining. Because at the end of the day, they should be pivoting based on what's going to make them the most money, what's going to make the shareholders the most value, what's going to increase the growth potential of these companies. And some of these companies completely pivoted away from Bitcoin mining into AI. Some of them are now locked in these long-term leases like Iris Energy, where they have all of the liability. They have all of the risk. And you have other companies that don't have all these partnerships or risk or liability just yet, like Bitfarms. And so there's a potential here that AI draws down substantially. But the power and the data center necessity and need across the board, whether it's for AI, whether it's for general compute, whether it's for Bitcoin mining, is still going to be there. So the companies that are not locked in to these high-risk deals, like Bitfarms, like TerraWolf, like Marathon Digital, they could potentially pivot, whether it's back to Bitcoin mining, or other compute, or other data center needs. They can pivot. The companies like Iris Energy cannot pivot. Companies like OpenAI, they can't pivot because that's what their company is. AI, they have the deal signed. They have all the risk. And so let me know what you guys are doing. Are you shorting or betting against NVIDIA, Palantir, Iris Energy, TerraWolf, Bitfarms, Marathon Digital? And if you're not, what are you doing? Are you involved in the markets? Are you not involved? Are you just observing? Are you planning to get into a position, whether it's for or against the price going higher or lower? Let me know down below in the comments of this video. Make sure you guys are subscribed to this channel. Make sure you guys also give the video a free thumbs up. We upload every single day to bring you the latest happening in the financial world. I'll see you on the next video. Thanks for watching.